Good morning, good evening, good afternoon. This is Hejin Lee, and I wanted to share with you some of my thoughts and opinions regarding precious metal gold. For gold, I rarely do any short term analysis because if I'm trading gold on a short term, especially day trading, that's a disaster and a recipe for failure. If I'm doing swing trading, I'm not going to have a life. I'm going to be sitting in front of my computer doing nothing but staring at price or constantly checking for the price, and it's going to be basically no happiness to be found in doing that. So I want to go over with you what I have been putting out now for almost a year, a bearish call for gold. So let me take you from the beginning. Way back in 1998, we had a wave 1 and 2, and wave 3. You can count us up waves 1, 2, 3, 4, and 5. Wave 3 peaked at around 2008, February. Then we had an ABC. I'm sorry, no, this was a WXY. Wave 4. And then we had wave 5. Now, what should be very obvious is a disproportionate length of wave 5 compared to 1, 2, 3, and 4. And this is an extended fifth, ladies and gentlemen. And this extended fifth cannot be denied from an Elliott wave perspective. Yeah, you can try and cheat and say 1, 2, I'm going to put 3 and 4 and 5 there, but from a form and fit perspective, it just doesn't look right then. It doesn't look very impulsive. The most obvious waves that one can identify are wave 5 and 3. They're the biggest peaks usually. So if we measure the height of 3 and compare that to the height of 5, I think we've got about 1.618. Okay? And that, ladies and gentlemen, is an undeniable extended fifth wave. And I'm not seeing enough gold analysts even taking a look at the weekly Elliott wave counts. Because when you're so myopic, buried in the short term only, you miss the big picture. So if we've got an extended fifth, to me, I often call this, while it's happening or before the correction even starts, I would draw a red halo around the projected wave 5 region. And that is what I call an red event horizon. Because it's a watch out moment. Why is that? When you have an extended fifth, it is a warning saying that the decline, the coming correction, is not going to be a very small one, but it's going to be a very deep correction, because usually the correction retraces to the prior wave 4. And I believe the textbook says to the subwave 2 of that 5, or to this zone. For cryptos, when you have an extended fifth, the retrace goes to the prior wave 2. And that usually means 98% retracement. And how many altcoins are you seeing at 88 to 98% retracement? Almost all of them, because every one of them had an extended fifth wave. Now we're looking at another one that already executed in gold, and this extended fifth wave has already done quite a bit of damage. And this decline, the initial decline, I count 5 waves. 1, 2, 3, 4, 5. And the subwaves of this fifth wave is an ending diagonal, counting as And that means that the ending diagonal is allowed to have overlaps between wave 1 and 4. Ending diagonals quite often happen within wave 5s. It's a terminal event. So that confirms that this is a 1, 2, 3, 4, and a 5. So this is an A wave. This is not the end of the correction. Correction does not finish in 5 waves. Whenever you see the initial downdraft counting in 5, that should say this is a zigzag. Very good probability of being a zigzag. Now back around this time, I started saying this is a B. Maybe I thought the B was over here. It'll be an ABC. But I think the B actually finished in an ABC. The red B is complete, most likely. And if the B is complete, and we have wave 1 down and 2 up, I think the wave 3 of C is in progress, has been initiated. Now, back when B was still being worked on, I had sent this chart to somebody, some other analyst, and he told me to throw Elliott waves into the trash can. Obviously, he was pissed because he went against his very bullish call for gold. But gold has been doing nothing except putting in a lower low for the year. Now, I also said there's a bit of a bear flag right here. And that pissed off a lot of people. Why? They didn't like the call. Obviously, they were gold bugs, very bullish in gold. That bear flag has broken to the downside, and that breach has been highly decisive. What does that mean? Price went below the lower trend line of the bear flag, and it's staying down there. And this extended fifth is doing its ravaging on the price of gold. Some people are saying, yeah, but okay, we're seeing the miners increase and ramp up, even though gold is declining. Ask me if I care. I take every entity on its own merits of its own count. Yes, there are correlations. Just because the miners are going up does not mean that the gold will go up. It can mean that the miners will go down with gold. That's the way I see it. So, if red A is a 5, red B is a 3, then the red C has to be a 5 if this is going to be an ABC zigzag. A zigzag is made up of 5, 3, 5. So we've got the 5, we've got the 3, and so far of the remaining 5, we have the 1 and 2 and the 1 of 3 of C. If this wave 1 of 3, white 1 of blue 3 is complete, then we're going to get a bounce of a few $100, maybe $100 to 1,300. So I expect gold to go from 1,200 to 1,300. Yes, absolutely. Just because it's bouncing doesn't mean that we're on a bull market. This is, to me, a wave 2 bounce, which can trace all the way as high as 1353 if it wants. It just cannot equal the origin of 1. That is the rule for the relationship between wave 1 and 2 in Elliott waves. And once this 2 completes, and I start posting this again, it'll piss off a lot of the bulls. I'll get lot of the very uncivilized emails, even threats. It's amazing how people function, coming into my inbox. And once this 2 completes, we're going to get the 3, 4, and 5. Now, this blue 3 could go all the way down to the below of start of wave 4. And this 4 will retrace back to the midpoint of prior 3. And I think it can go as low as $430. My original target is 672 to where the prior wave 4 is. But remember that extended fifth will kill us the stock, or in this case, gold, and it'll bring it down to 672 or lower. Now this will piss off a lot of the gold bugs. However, for now, I'm going to keep it to the 672 target, to the prior wave 4 target, with the alternate primary, saying that it can go as low as here, or maybe even down to wave 2, $270 gold. Crazy. Sounds crazy. Especially when you have vested interest in the bull side. Absolutely. I know. So again, this extended fifth cannot be ignored. It has to play out. And this was not the bottom. And this is not the bottom. I think the bottom of a zigzag is always below the bottom of A. It's lower than A. And for now, it'll be 672. Now, let's take a look at an alternate count. Remember how I said the B could have been here? Well, the B could be here, where we can say A, B, A, B, C. Okay? Let's say it goes back to the underbelly of this resistance zone, 1540. My count for the ABC remains unchanged. This will still be an A, B, 1, 2, 3, 4, 5. Nothing will change. Only the dynamics of the waves will change. And if price goes back to 1500, I can guarantee you that people are going to say the bull market is back for gold. The mania for gold had never gone away, etc., etc., etc. But that's how it always works. So yes, I am a gold bear, and I've just explained to you my Elliott wave rationale as to why, especially given the 1.618 extension of wave 5 compared to 1, 2, 3, and 4 of the prior waves. This is undeniably an extended fifth, and this is not, in my opinion, the bottom. I believe we've got lower lows to go as an ABC zigzag, and the red C of a zigzag is lower than A, in my opinion, in this case. Have a great day.